Hey everybody, welcome to the daily update for Thursday, December 11th, 2025. It is the 11th, right? Let me double check that. Yep. How great are the Cars? I mean, one of the best bands ever. Sometimes I forget about bands and I go, that band was great. Happy Thursday, I guess. My office at home is on the second story, so I have two big bay windows that I open, and right in front of them is a big maple tree. And the birds are singing like they think it's spring because it's 78 degrees out here. So if you hear some birds chirping in the background, that's real. All right. I'm going to take a little circuitous way to today's daily update. One of the things that attracted me most, by the way, I got to remember to sit up straight. Like when I'm watching this thing, like posture when you are 58 and 6'4", super important. One of the things that first attracted me to trading when I was really young was the freedom that it would allow you. Now, back then, it wasn't so much freedom of movement. Now it is. You can trade anywhere you want. It was so much. It was more about you can trade if you want, or you don't have to trade. Like if you have a day that you're sick, you don't have to trade. You have to be in front of your computer. If you want to go to the beach one day, you can. Right. So you have this flexibility. One of the things that's been great about being a parent for me is that during pretty much, I'd say 95% of my kids' youth, I've been a stay at home, work at home, trade at home dad, which I love. That's because that's my number one priority for sure. But it makes it a little bit tough when you're on the West Coast. I always envy those folks on the East Coast where they don't start trading or the market doesn't open until 9:30. By then, the kids are up, they've had breakfast, they're off to school, and you're back at your desk. It's not how it works out here. My current schedule right now, I get my son up at 7. Then about 20 minutes after that, I make him breakfast, make him lunch. Then I got to take him to school about 8. So, I'm open. I'm here for the open. I'm watching the close. I'm here at the open. I'm watching it at my desk. Then I got to step away for a little bit. Of course, I got my phone. I got my alerts and everything like that. I got to make him some lunch, breakfast. And I come back, right? Then I've got to go at 8 and I'm gone for about 20, 25 minutes. This is a long and rambling way of saying many, many years ago, I noticed a pattern. And the pattern was when we would have a big up day or a big down day, a lot of times the determinant on whether we would follow through on that happened right around the 8 to 8:30 Pacific Coast time frame. Sometimes 8:30 to 9. It's a pattern that I've seen for decades. It doesn't always correlate. It's like everything. Sometimes things get in sync. Sometimes markets get in sync, indicators get in sync, and then sometimes they go out of sync for a while. For the last year plus, it's been really in sync. So when we've had a day that starts out down, a lot of times we see buyers step in around that 8 to 8:30 spot. That turns out to be the low. And then we get these reversals or we just grind back up. Now, if that doesn't happen, if we roll over at that spot, then we're more likely to have a trend down day. So today, let's actually just let's go over here. So today, get the cards out of there. Yesterday, I said in the daily update, there's nothing technically wrong with this market. After that, Oracle came out with earnings and with an announcement that they needed 15 billion more in capex, or they were going to add 15 billion more in capex expenses. Of course, the market didn't like that for Oracle. Now, the other side of that is, well, that 15 billion's got to go somewhere. It's got to go to other companies, maybe other hot names in the market. But the great thing about fundamental information like that is we don't have to make a determination. Is it good? Is it bad? Whatever. We just watch what happens to price. So when I came in this morning, a lot of people on the streams on FinTwit, a lot of people in the Lund Loop community, very bearish, right? A little concerned. I didn't see it. I didn't see it because, first of all, as you can see here, we had about a 300-point rally off the overnight lows in NQ. When I went to bed, it was down like 260, 270, and overnight it firmed up. The other thing was, from a technical standpoint, and I put it in here, all the indexes are above their ADMA. IWM just hit all-time highs, and all the other ones are just within spitting distance. So again, you know, look, every 20% correction starts with a 1% correction. But what I said is I want to see, as always, I want to see where we are at that 8 to 8:30 time frame. And this goes back to something I talked about, I think earlier this week. It was one of the Lund Loop profit principles or market mechanics. It's that we don't predict, like, I mean, everyone has an opinion, right? But I don't want to predict. I want to more react to what happened. So let's just walk through how today unraveled, because I think it's important. It's important. We see these little signposts along the day. And, I posted these all in Discord, but they give us an idea of where we're going at certain points in the day. So this is NQ. That's the overnight low. And to be fair, when we came in, when we opened, the market started to sell off, specifically NQ. And you see this big precipitous drop right here. But where did it stop? It stopped literally right at the same spot that we had the overnight lows. Okay. So now we want to see that spot's a reference point. We want to see what happens. And so we get this big rally, right? We get this nice, massive counter trend rally. Then we come back in a little bit. And where are we at 8:30? Well, at 8:30, what we've done on NQ is we've not been able to really get below this low here, this second low, right? We're holding this level. And then we start putting the puzzle pieces together. Let's look at the Dow at 8:30. Okay, there's the Dow at 8:30. It's on a rocket ride to the moon. So that's got to be good for the overall market. We know that this is kind of a NASDAQ specific story because it's Oracle. And the question is, are we going to get contagion? Is it going to carry over to the rest of the market? We don't know yet. We look at IWM. What's IWM doing? IWM has just been basing beautifully here, and it's starting to break out at 8:30. Okay, so we got the Dow, IWM, which are giving us positive signs at that 8:30 mark. What's SPX doing? Okay, SPX not breaking out, but look, it's got a higher low. So we had this low here, right? And now we've got this low. It's actually put in 3 lows. There's 1, 2, 3. So it's getting progressively healthier. Look at the Qs. Again, same thing as NQ. Just can't get below that level. So obviously NQ is the weakest. Second weakest, SPX, but higher lows, right? IWM breaking out above all the moving averages, and the Dow Jones on rocket ride to the moon. What else do we have at that point? Well, here's the VIX at 8:30, which is basically getting ready to go from green to red. And also, look at the difference here. Okay, so here's that bounce, right? There's the low, and there's that big bounce on NQ. Look what the VIX did. So there's the low, meaning the low on NASDAQ. That's a spike. There's the bounce. Look how much lower that is. And look, we didn't even get up to that gap up yesterday. So we're starting to see the market tell us, hey, maybe we're not going to fall through on the downside. Look at Oracle itself. All right. So Oracle, what does Oracle do? It goes flush, higher low. There we are at 8:30, which is still a higher low. And if you wanted to play it, this was a spot you could have played it right here when it breaks the 21 as the market starts to rally at that 8:30 spot. Or if you're a little less aggressive, like this, something like that. Okay. And look, the point of this is not to say, oh, this person's right, that person's right. The point is, because I want to predict myself. I want to say, here's what's going to happen, and it happens. But that pattern recognition that I started seeing 15 years ago that's been working this year, it will end at some point. But right now, that pattern still seems to be very valid. We still get to that 8 to 8:30 Pacific time spot, and that's usually where either we're going to go over and continue, or if, like, let's say we rally like this, we come in, we get back up to that 8:30. If we continue, it's going to be a trend up day. So I just think that's a key spot. And I think if you pay attention to the things that happen in the market incrementally, sometimes you can get a little bit of an idea what's going to happen, and it might be, contraindicator from what everyone else thinks is going to happen. So, all right, let's go to, let's just go through the indexes here. All right.